Building wealth is often presented as a straight line, a simple mathematical equation of earning more than you spend and investing the difference. But there is a hidden reality that most financial gurus fail to mention. As your net worth grows, the obstacles don't disappear, they simply evolve. The traps that threaten a person with a few $1,000s in the bank are entirely different from the ones waiting for someone with 1 million. If you don't recognize these psychological and structural shifts before they arrive, you risk undoing years of disciplined progress in a matter of months. At the starting line, when your net worth is zero or even negative, the primary trap is identity. Many people remain stuck not because of a lack of income, but because they have internalized a narrative that they are not money people. They view investing as a luxury reserved for the elite and budgeting as a form of deprivation. This identity trap is the most restrictive because it prevents action before the journey even begins. In an environment where the average household net worth is heavily skewed by property values, it is easy to feel like the game is already over. However, many who appear wealthy on paper are actually asset-rich and cash-poor. Realizing that wealth is a skill to be learned rather than an innate trait is the only way to break through this initial ceiling. Once you begin to build momentum and reach your first $10,000, you encountered the motivation trap. This is the stage where the process feels painfully slow. You might be saving a significant portion of your paycheck every month, but after a year, the total balance still feels insignificant in the context of buying a home or retiring. This is where impatience takes root. Your brain begins to tell you that the sacrifice isn't worth the reward, leading many to reset the clock by spending their hard-earned savings on a vacation or a luxury item. The reality is that the early stages of compounding are boring. Every dollar saved in this phase is doing the heaviest lifting it will ever do because it has the longest runway to grow. Giving up here is like walking out of a movie before the plot even develops. As your net worth climbs toward the $100,000 mark, a more subtle enemy emerges: lifestyle creep. As your career progresses and your income rises, there's an almost irresistible urge to upgrade your life in lockstep. A nicer apartment, more frequent dining out, or a newer car feel like reasonable rewards for your hard work. Individually, these choices seem small, but collectively, they consume your entire surplus. This trap is seductive because it feels like progress, but in reality, you're running faster just to stay in the same place. You become a high-income earner who is still living paycheck to paycheck, effectively trapped by your own success. Once you cross that six-figure threshold, many fall into the premature optimization trap. This is where you begin to obsess over the smallest details, such as comparing two different index funds that have a 0.02% difference in fees, or spending weeks researching complex tax structures. While efficiency matters, it should never come at the expense of the fundamentals. At this stage, the most significant drivers of wealth remain your savings rate and your ability to increase your primary income. Saving an extra 5% of your salary will always move the needle further than shaving a fraction of a percent off an investment fee. The climb from $100,000 toward $500,000 brings the comparison trap into full focus. This is the zone where you start looking at what your peers are doing. Social media amplifies this, showcasing the curated highlights of others' lives: new homes, luxury travel, and high-risk investment wins. It's easy to feel like your steady, diversified portfolio is inadequate compared to someone who made a quick fortune in a speculative asset. This emotional cost of comparison erodes discipline faster than a market crash. When you start making financial decisions based on the perceived success of strangers, you effectively outsource your future to people who don't know your goals or your risk tolerance. At the $500,000 mark, you face the complexity trap. Your finances are no longer simple. You likely have a mix of retirement accounts, brokerage portfolios, and perhaps real estate. This is where tax implications become a genuine burden, and the stakes of every decision feel much higher. A 10% dip in the market is no longer just a small number. It represents a year's worth of salary disappearing on paper. This frequently triggers emotional reactions, leading investors to panic sell or stop their contributions precisely when the market is offering a discount. The challenge here is no longer just mathematical, it is psychological. You must manage your own fear as much as you manage your assets. Between $500,000 and $1 million, the most common pitfall is concentration risk. Many people build wealth through a single avenue, often their primary residence or a specific industry. While concentration builds wealth, diversification preserves it. Relying too heavily on one asset class or one geographical location leaves you vulnerable to localized economic shifts. If your wealth is tied up in a single house or a single sector, you aren't truly financially independent. You are dependent on a market you cannot control. Finally, crossing the $1 million threshold introduces the comfort trap. Reaching a milestone that society deems successful can lead to a dangerous sense of arrival. You might stop tracking your expenses or become loose with your spending because the numbers feel large enough to handle it. This sense of security is often an illusion. Inflation, changing tax laws, and unforeseen life events can quickly erode a $1 million nest egg if the discipline that built it is abandoned. The most persistent trap at every stage is the belief that the next milestone will finally bring total satisfaction. We tell ourselves we will feel secure at 50,000, then 100,000, then a million. This is the hedonic treadmill of finance. Without a clear definition of what enough looks like for your specific lifestyle and values, no amount of money will ever feel like enough. The path to lasting wealth is not just about the numbers in your bank account, it's about the evolution of your character. It's about recognizing that every new level of success brings a new set of challenges, and the only way to stay on top is to see the traps before you step into them. Real wealth is the freedom to stop running the race, but you can only do that if you understand the rules of the game at every level.